So you have learned the specific entry rules for the bounce strategy. Now, every day as you screen for these trades, you may find quite a number of them. But of course, you only want to take the highest quality setup. So what makes a high quality bounce setup? So there are a couple of additional filters I use to only take the really good quality ones. So let me go run through what are some of these filters I look for. Well, first thing is I avoid bounce trades with potential resistance. If I'm going long and if I'm going short, avoid trades with potential support. What do I mean? So for example, if you look at ACT, right? So the price is rallying, bounced off the 18 EMA, rallied, and now it's bouncing off the 50 moving average. In fact, it's bouncing off 3 times, right? So you can see in this case what has happened, right? You can see clearly that there is a kind of resistance here, right? So in other words, the price is in kind of like a range, right? And it can't break the range. So when you see a bounce, okay, and you see that the price has really gone into a range where there's a resistance, a potential resistance, especially when you see long upper shadows. Remember, when you see long upper shadows, like in this case, it tells you that there are a lot of hidden sellers around here, okay? So even though I see a potential reversal candle here with a confirmation, I'm not going to take that trade because there's a high chance that the price will not break this resistance level, right? So never enter within a mini consolidation at the moving average, okay? Similarly, if you're going short, okay, ensure there's no support and the price is not going sideways. Now, the ideal kind of bounce setups I find are what I call V-shaped bounce setups. So V-shaped bounce setups are when the price goes down rapidly and bounces and shoots up rapidly. It's like a V shape, all right? So here's a perfect example. You can see, boom, bounce, 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 and goes up. So that's what we call a V-shaped bounce, right? So think of it kind of like a ball, right? When you throw the ball really fast, the ball hits and bounces up, right? You want those kind of setups. You don't want to throw a ball and the ball hits the floor and goes doom, 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 and it's like bouncing and it loses momentum when there's a resistance, right? So you want these clear V-shaped bounce setups, right? Now, the other thing that's really crucial in selecting the right bounce patterns is to ensure that there is a clear wave pattern. Now, what's a wave pattern? Remember that prices move in waves. On an uptrend, they move in waves such that it's an impulse, right? A retracement, an impulse, a retracement. So it's like a wave pattern where it makes higher highs and higher lows. That's a wave pattern, okay? So if I am buying here at the bounce, I ideally want to ensure that this low is higher than the previous low. Why? Because if this low is higher than the previous low, it tells me that the uptrend is still intact. The wave pattern is still there. Now, what if I see something like this? Right? And this is a bounce, right? So let's imagine it bounces off the moving average here. But this low is making a lower low than this low. So it's not making a higher low. So you could argue that this uptrend has been broken because this low is lower than the previous low, right? So that's what I mean by wave pattern, okay? So let me explain it again here. So when we're taking a long bounce setup, it is best that the swing low reversal candle, which is bouncing, makes a higher low than the previous swing low, okay? So what's a swing low, right? So these are this is a swing low points, okay? So over here you can see that the price is bouncing off the 100 moving average, right? That's a bounce, okay? So would I take this entry? Well, this is the reversal candle, right? That's a reversal candle. And this candle is making a higher low than this candle, right? Higher low, higher low. So it tells me that the uptrend pattern, the wave is still intact, So these are the kind of trades I'll take, all right? Let me tell you one that I will not take, okay? So this one over here. So you can see that this is a bounce, right? That's a single candle reversal pattern. It's a confirmation candle, looks nice. But this reversal candle is making a lower low than this previous swing low. All right, so this swing low is lower than this swing low. So it could mean that, right, that's a previous swing low, right? It's making a lower low. So this could mean that the uptrend wave has been broken, all right? So in this case, the reversal candle is making a lower low than the previous swing low. This is less probable as it may indicate uptrend has been broken, okay? However, there's a third scenario. And here's the third scenario, okay? So in this case, you can see that this is the bounce, right? Bouncing off the 50 moving average, okay, and that's a reversal candle. Now, this reversal candle is making a lower low than the previous swing low. Can you see that? So you may say, hey, it broke the wave pattern, right? But this 50 moving average that is bouncing off, you can see that it has been tested before to be a strong support. Okay, so in other words, in this case, the reversal candle is making a lower low than the previous swing low. However, the moving average that is bouncing off the 50 has been recently tested by a previous swing low over here. This indicates that the stock could be still part of a bigger uptrend, supported by the 50 moving average. So I'll take this trade. So in other words, an uptrend wave pattern exists if the price is making higher lows or the moving average has been tested before. All right? Now for short trades, it is the opposite, right? So if I'm going short, I want to see a downtrend wave pattern. So recall that a downtrend wave pattern looks like that. That's a downtrend wave where it makes lower highs, lower highs, lower highs. So if I'm entering here, right, if I'm entering here, I want to ensure that the reversal candle is making a lower high than the previous swing high, telling me the downtrend wave pattern is intact, right? So in this case, you can see the candle is bouncing off the 50 moving average. That's the reversal candle, okay? And the reversal candle is making a lower high than the previous swing high. So the wave pattern is still down. So I'll take this entry. For short bounce, it is best that the swing high reversal candle is making a lower high than the previous swing high, right? That's what we said. Now, this is a case where I'll not take the trade. In this case, you can see a 2-candle reversal pattern bouncing off the 100 moving average, okay? So that's a reversal candle. But what's happening? This reversal candle is making a higher high than the previous swing high. So this could mean that this downtrend has been broken, because now it's making a higher high than the previous swing high, okay? So in this case, the reversal candle is making a higher high than the previous swing high. So this is less probable as it may indicate the downtrend wave has been broken, all right? So I'll not take this trade. Now, here's again the third scenario. Third scenario is one where the reversal candle, which is bouncing off the 50 moving average over here, you can see, right? That's my reversal candle. It's making a higher high than the previous swing high, right? But it is bouncing off the 50 moving average. And this moving average has been tested before, right? It was tested here, tested here. So in this case, it has been recently tested by a previous swing high. So this indicates that the stock could still be part of a bigger downtrend. So in this case, I would take the trade. All right, so the final filter which I look at is what I call the counter trendline filter. So when I go long, I want to ensure that there's no potential counter trendline resistance that could potentially stop my long entry from becoming a winner, right? So what's the counter trend line? Now, again, if I'm going long, I'm following the trend, right? So for example, let me just draw this up, down, up, down, up, right? Great. So can you tell me what's the trend? The trend is up, right? So it's an uptrend. So we call this the trend line, right? That's the trend line, okay? Now what's a counter trend line? A counter trend line is a trend line that goes opposite of the trend, okay? So a counter trend line is one that's going in this direction, okay? So in every uptrend, there's always a potential counter trend that could exist, and let me show you how it may exist. So what happens is you have this uptrend, right? It's going up, coming down, going up, coming down. Now as it goes up, right, to a high here, sometimes it may go down, go up, go down, go up, go down, and then bounce. Okay, so this is the moving average, right? So the price bounces off the moving average. But what you notice is that sometimes, okay, the price makes higher highs, like so, and higher lows. That's the main trend, right? But there's a counter trend because it makes lower highs. Can you see it makes lower highs and lower lows? Okay, so you could draw a counter trend line here, and that's the trend line. Okay, so this acts as a potential resistance. So the important thing is when you're entering a trade, ensure you do not enter it right below the counter trend line, because sometimes it may go up, hit the counter trend line, and continue going down. And I'll show you some examples in a while. Okay, so how do we draw these counter trend lines? For long trades, the trend lines are drawn from the highest pivot to the next pivot on the counter trend line. Now, what the heck's a pivot? Right? I gotta explain pivot in a while, so just hanging there, right? Now, if there's no second pivot, we draw the trend line from the highest pivot to the high of the next candle, if there are no more pivot points on the counter trend line, all right? So I know you may be thinking, what's a pivot? All right, hang in there, let me just explain what a pivot is. And we'll get back to this, all right? Now, what's a pivot point, okay? A pivot point is a point where it makes a higher high than the previous candle and a higher high than the next candle. That's a pivot point, right? So think of pivot points as a V shape, or as like inverted V shape in this case, right? So that's a pivot point, okay? So let's see if you understand that, okay? So a short pivot is the high of a candle where the preceding candle, which is the candle before it, and the subsequent candle are both making lower highs. That's a pivot point, right? So let me see if I can draw an example, see if you get it yet. I'm sure you do, but let's just double check. Okay, so can you tell me where are the pivot points? In this pattern, where's the pivot point? Okay, so you should spot that this is a pivot point because it makes a higher high than the previous candle and the next candle. That's a pivot point, and this is a pivot point. Got it? All right, so we understand pivot points? Okay, so let's move on. So with that, you understand pivot points. Let's see how you draw a pivot point, right? Okay, so you can see that this stock is bouncing off the 50 moving average with a reversal candle, right? Now we don't have a confirmation candle yet, but let's just look at it as it is, okay? So what you want to do is you want to see if there's a potential counter trend line. How do you draw the counter trend line? Well, you go and you look at the highest pivot point. So that's the highest pivot, right? And you connect it to the next pivot. So this is the next pivot. So you connect this, you connect this point to this point, and there you go, voila, that's your counter trend line. Okay, so you want to make sure that when you are buying at the entry price, it is not just below the counter trend line, because if you buy it right below, right, it may not be able to clear that resistance. You want to buy above the counter trend line. So you got to make sure that the confirmation candle closes above the counter trend line. All right. So I repeat, how do you draw the counter trend line? Look for the highest pivot and connect it to the next pivot. Counter trend line. Okay. Now, what if there is no second pivot? Right. So you connect it to the highest pivot, but there's no second pivot. Then what do you do? Well, the answer, which I mentioned earlier, is this. If there's no second pivot, you connect the highest pivot to the high of the next candle. All right. So in this case, you connect this to this. That is your counter trend line. Okay. So we have to draw counter trend lines to filter the bad trades out. Now, if you're going short, it's the opposite, right? So if you're going short, the trend is going down like so. Where's your trend line? All right. Your trend line is going down, right? Where's your counter trend line? Your counter trend line is going up, right? So it's counter to the trend, okay? And it's a potential support level. So when you're going short, ensure there's no potential trending support line that could potentially stop your price from going down. So how do we draw these counter trend lines for short setups? Okay, so it's the opposite. In this case, we draw the trend line from the lowest pivot to the next pivot on the counter trend line. Or we draw the trend line from the lowest pivot to the low of the next candle if there are no more pivot points on the counter trend line. Okay, so again, pivot point. Now, earlier on you learned how to look at pivots on an uptrend. Now, on a downtrend, the pivots are the reverse. Okay, so a long pivot is the low of a candle, like so, where the preceding candle, which means the candle before it, and the subsequent candle, which is the next candle, are making higher lows. So a pivot point is again a V shape or an inverted V shape. So that's a pivot point. Make sense? Okay. So let's take a look at a short example over here. So we can see that the price is trending down. The price rallies up, and again, it's bouncing off the 50 moving average, right? So we're anticipating that it's going to come down, but you got to check, is there a counter trend line support that is stopping it? Okay, so how do you draw it? Well, you go to the lowest point of the pivot, right? So that's the lowest pivot. You can take this pivot and you connect it to the next pivot. So where's the next pivot? There, this is a pivot point, right? So can you see that V shape over there? That's a pivot point. That's a pivot point. So you connect this low to that low. That is your counter trend line. So you do not want to enter short above that counter trend line. All right, you have to wait for a confirmation candle to close below the counter trend line before taking a short trade. So these are the additional filters I look at in analyzing my long trades and my short trade bounces.